Get ready because the crypto world is absolutely exploding with news, and you're getting it first on Bitcoin Bulletin. The pace is relentless, the stakes are higher than ever, and if you miss even a minute, you might miss everything. We've got game-changing shifts in investment flows, market movements that are keeping everyone on the edge of their seats, and brand new innovations that are redefining the future. Stick around, because this is the intel you need to stay ahead. Let's dive in. First up, a seismic shift in the ETF landscape. We're talking about Ethereum making a move that could redefine market momentum, potentially even leaving the king itself in its dust. What does this mean for where things are headed? You'll want to hear this. Then, we're tracking the pulse of the major players. Bitcoin and Dogecoin are playing it cool, but what's lurking beneath the surface? We've got expert analysis on key price targets and projections that go way beyond the horizon, painting a picture of where this cycle might be heading and when. The volatility is heating up. And the innovation doesn't stop. We're exploring a new frontier in institutional finance, where familiar assets are being reimagined with groundbreaking technology. This could unlock entirely new avenues for investment and redefine what's possible in the digital asset space. Finally, we're looking at how the foundational layer of digital assets is evolving to become the backbone for a connected financial future. Discover how new security protocols are paving the way for seamless cross-chain interactions and what this means for the broader ecosystem. Don't go anywhere, hit that subscribe button and ring the bell so you never miss an update. Ethereum ETFs outshine Bitcoin in crucial inflow data. The landscape of digital asset investment vehicles is witnessing a significant shift, with Ethereum's spot ETFs reportedly surpassing Bitcoin's in terms of net inflows. This development marks a critical juncture, potentially signaling a change in investor sentiment and a reevaluation of market momentum across the leading cryptocurrencies. As institutional capital continues to flow into regulated crypto products, the performance of these ETFs becomes a key indicator of broader market trends and the perceived value proposition of different digital assets. The recent data highlighting Ethereum's ETF inflows exceeding Bitcoin's is more than just a headline. It's a potential indicator of evolving institutional appetite and a recalibration of risk-reward assessments within the digital asset space. For months, Bitcoin ETFs have dominated the narrative, attracting substantial investment as the first major spot crypto ETF approved in the United States. However, the recent surge in Ethereum ETF inflows suggests that institutional investors are increasingly looking beyond Bitcoin to diversify their digital asset portfolios. This could be driven by a variety of factors, including Ethereum's robust utility as the foundation for decentralized finance, DeFi, and non-fungible tokens, NFTs, its upcoming technological upgrades, and perhaps a belief that it offers more room for growth compared to Bitcoin at current valuations. The implications for price momentum are significant. When an asset class or a specific cryptocurrency experiences strong, sustained inflows into its ETF products, it often correlates with increased demand in the underlying spot market. This demand can create upward pressure on prices, potentially leading to a positive feedback loop. If Ethereum continues to attract more capital through its ETFs than Bitcoin, it could bolster its price performance relative to Bitcoin in the short to medium term. Analysts are closely watching whether this trend is sustainable or a temporary anomaly. The narrative around Ethereum's transition to a proof-of-stake consensus mechanism, its continued development of Layer 2 scaling solutions, and its central role in the burgeoning DeFi ecosystem are all factors that may be contributing to this increased institutional interest. Furthermore, the anticipation of potential future developments, such as the approval of Ethereum futures ETFs or even a spot ETF in other jurisdictions, could be further fueling investor optimism. The comparison between the two asset classes is inevitable, and this inflow data provides a new lens through which to view their respective market positions and future potential. While Bitcoin remains the primary store of value and the most established digital asset, Ethereum's growing utility and ecosystem development are presenting a compelling case for a broader range of investors. The ongoing competition for institutional capital between these two giants will undoubtedly shape the trajectory of the cryptocurrency market in the coming months and years. This shift is sparking intense debate among analysts and investors about the future leadership in the digital asset market, with many questioning if Ethereum is poised to challenge Bitcoin's dominance. Now, what's happening with the market leaders themselves as this ETF story unfolds? We'll break down the latest on Bitcoin and Dogecoin. Dogecoin holds steady as Ethereum, XRP experience downturns. Cryptocurrency markets are currently navigating a period of consolidation, with Bitcoin and Dogecoin exhibiting sideways price action ahead of key economic data releases. Meanwhile, Ethereum and XRP have seen notable declines, indicating a divergence in recent performance among major digital assets. This mixed market sentiment comes as traders eye inflation data and significant options expiries, factors that could introduce considerable volatility. The cryptocurrency ecosystem is in a state of watchful waiting, with Bitcoin hovering around critical technical levels. Traders are closely monitoring projections for potential price targets, with some identifying $119,000 as a significant level for initiating long positions, suggesting a bullish outlook contingent on specific market conditions. Other analyses point to the immediate short term, anticipating a test of $115,000, but cautioning that the 200-day exponential moving average on the 4-hour chart could act as a resistance or pullback zone. This highlights the nuanced view traders are taking, balancing optimistic targets with realistic short-term hurdles. The broader context of Bitcoin's price history is also being examined, with historical data suggesting that past bull markets have lasted approximately 1,060 days. Extrapolating from this trend, some analysts project the current cycle could potentially conclude around October 2025, providing a long-term roadmap for market participants. However, the near-term outlook is laced with uncertainty. Friday is being flagged as a potentially pivotal day, not only due to the release of crucial inflation data, such as the Personal Consumption Expenditures (PCE) price index, but also because of a substantial $12 billion in options contracts set to expire. The concentration of these expiries at a max pain level of $116,000 suggests that market makers might be incentivized to guide prices towards this point to maximize their profits, potentially leading to increased volatility as the expiry approaches. This confluence of economic data and options, market dynamics, creates an environment ripe for significant price swings. The quiet day for Bitcoin, despite its recent bounce, is tempered by data suggesting that the correction experienced last week might extend further. This cautious sentiment underscores the sensitivity of the market to macroeconomic indicators and the technical positioning of major assets. The interplay between long-term cyclical analysis and short-term technicals, combined with the immediate impact of economic events and derivatives expiries, paints a complex picture for traders seeking to navigate the current market conditions. Market participants are keenly observing these technical levels and economic indicators, anticipating potential price movements amidst heightened volatility. As we see these fluctuations in the established markets, a new wave of innovation is emerging in how institutions are engaging with crypto. Let's explore that next. Tokenized Bitcoin credit facilities emerge as next frontier in institutional finance. A novel financial instrument, the tokenized Bitcoin credit facility, is rapidly gaining traction within the institutional crypto finance sector. This innovative approach leverages blockchain technology to represent traditional credit facilities as digital tokens, with Bitcoin serving as the underlying collateral. This development signifies a potential paradigm shift, bridging the gap between traditional finance and the burgeoning digital asset ecosystem by offering enhanced liquidity, transparency, and efficiency. The introduction of tokenized Bitcoin credit facilities represents a significant evolution in how financial institutions can interact with digital assets. Traditionally, credit facilities involve lending and borrowing arrangements, often collateralized by traditional assets. By tokenizing these facilities and backing them with Bitcoin, institutions can unlock new possibilities for capital deployment and risk management. The process typically involves creating digital tokens on a blockchain that represent a specific credit agreement or a portion thereof. These tokens can then be traded, transferred, or used as collateral in other financial transactions, all recorded immutably on the distributed ledger. Bitcoin, as the most liquid and widely recognized cryptocurrency, serves as an ideal collateral asset due to its established market infrastructure and perceived store-of-value properties. This tokenization process offers several key advantages. Firstly, it enhances liquidity. Previously illiquid credit agreements can be transformed into easily tradable digital assets, potentially creating secondary markets. Secondly, it improves transparency, as all transactions and ownership records are verifiable on the blockchain. Thirdly, it streamlines operations by reducing reliance on intermediaries and manual processes, thereby lowering costs and increasing efficiency. For institutional investors, this could mean greater access to capital, more flexible lending options, and new avenues for yield generation. It also provides a more efficient way to manage collateral and reduce counterparty risk. The underlying technology enabling this innovation often involves smart contracts, which automate the terms of the credit facility, including interest payments, collateral management, and liquidation triggers, ensuring compliance and execution. As regulatory clarity around digital assets continues to evolve, these tokenized solutions are poised to become a cornerstone of institutional crypto finance, offering a compliant and scalable way to integrate digital assets into traditional financial workflows. The potential applications extend beyond simple lending to include more complex derivatives and structured products, all built upon the foundation of tokenized real-world assets and cryptocurrencies like Bitcoin. This innovation is being hailed as a critical step towards integrating digital assets more seamlessly into the mainstream financial system, offering new opportunities for yield and liquidity. We've seen how traditional finance is adapting to crypto. Now, let's look at how Bitcoin itself is becoming the core infrastructure for a connected digital economy. Bitcoin poised to become cross-chain settlement layer with $50 raise and new security protocols. Bitcoin's potential to evolve into a foundational settlement layer for cross-chain markets is gaining significant momentum, bolstered by a substantial $50 million funding round for a key infrastructure project and the concurrent rise of new Bitcoin-grade security protocols. This dual development suggests a strategic push to enhance Bitcoin's capabilities beyond its role as a digital store of value, positioning it as a critical nexus for a more interconnected and secure decentralized financial ecosystem. The narrative surrounding Bitcoin's utility is expanding rapidly, moving beyond its established identity as digital gold to encompass a more active role within the broader blockchain landscape. The recent $50 million raised by a project focused on creating a portal to Bitcoin signifies a major investment in bridging Bitcoin's robust security and vast liquidity with the interoperability needs of other blockchain networks. This initiative aims to enable seamless asset transfers and communication between Bitcoin and various other blockchains, effectively turning Bitcoin into a central hub for cross-chain transactions. Such a development is crucial for the maturation of the decentralized finance (DeFi) sector, which often faces challenges related to fragmented liquidity and complex interoperability solutions. By leveraging Bitcoin's inherent security and network effects, these projects seek to create a more stable and reliable foundation for cross-chain DeFi applications. Complementing this funding boost is the emergence of Bitcoin-grade security protocols. This term refers to new technological advancements and standards that aim to imbue other blockchain networks or digital assets with security characteristics comparable to Bitcoin's. These protocols often focus on enhancing transaction finality, improving consensus mechanisms, and strengthening overall network resilience, drawing inspiration from Bitcoin's battle-tested proof-of-work, POW, consensus, and its highly decentralized nature. The implications for investment are profound. If Bitcoin successfully transitions into a primary settlement layer, it could lead to a significant increase in demand for the asset, not just for holding or trading, but for utility within a vast network of interconnected blockchains. This would create new revenue streams and use cases, potentially driving up its value and solidifying its position as a critical piece of global financial infrastructure. Furthermore, the development of Bitcoin-grade security for other networks could foster greater trust and adoption across the entire digital asset space, making it easier for users and institutions to move assets and interact with different platforms securely. This convergence of infrastructure development and security enhancement marks a pivotal moment, potentially unlocking the next phase of growth for both Bitcoin and the wider cryptocurrency market. This strategic push aims to solidify Bitcoin's role as a secure and reliable backbone for a future of interconnected digital markets, attracting significant investment and innovation. We've covered a lot of ground today, from ETF flows to market analysis and cutting-edge innovations. Let's quickly recap the biggest stories before you go. And that's a wrap on another action-packed Bitcoin Bulletin. We saw Ethereum's ETFs making waves, potentially outshining Bitcoin's inflows, signaling a major shift in institutional interest. Bitcoin and Dogecoin held steady amidst market uncertainty, with analysts giving us the inside track on future price targets and cycle projections. We explored the groundbreaking potential of tokenized Bitcoin credit facilities, bridging traditional finance with digital assets. And finally, we looked at how Bitcoin is evolving to become the settlement layer for cross-chain markets, fueled by massive investment and new security protocols. Don't miss out on any of this critical intel. Make sure you're subscribed, hit that notification bell, smash that like button, and follow us on all our social channels for even more real-time updates. We'll see you next time on Bitcoin Bulletin.